Hello everyone. Today we are going to discuss about journal entries, how to pass the journal entries, what is the rule we have to follow. So before that, we should know about six golden words. First one is asset, second one is liability, third one is expenses, fourth one is drawings, fifth one is equity, sixth one is revenue. So first one is asset. Asset means what? You have some future economic benefit from it, like cash, land and buildings, furniture, machinery. So you have benefit from these things. Like if you have cash, you can buy anything, a land and building, like machinery. If you have machinery, you can use that machinery and get some profit of it, like that. You have some future economic benefit. So second one is liability. So liability is nothing but a financial obligation. Just let's take one example now. So here we have one person taken loan from bank, okay, and he has received the money also. Now what is the obligation here? He has to pay that money in future. That is the obligation is created now. He has to pay that. That is nothing but a liability. Third one, expenses. Expenses means what? No future benefit. So you have already taken the service, but you have to pay that amount. Means expenses is cost of operations to generate income. Okay, you already taken the service and you have to pay that amount, like rent. Already taken that home, means already taken that home service and paying that rent, like that electricity you already use and paying that amount, salaries. Okay, that is called the expenses. You already taken the service and paying that amount. So no future benefit, just this is nothing but expenses, no benefit from it, like we have to pay that amount. Drawings. Drawings means what? uh, if I have invested that money into business, any amount, if I have invested that money into business, that is called capital. Okay, that is called capital. But if I'm taking that money from the capital amount, that is called drawings, means retaking that amount. If I'm investing that amount means what? Capital. The same amount, if I'm retaking that amount, that is nothing but a drawings. Okay, now equity or capital. Capital, you understand. Equity means what? Let's take example. There are many investors, okay, like more than 100,000. They are investing money into business. Okay, that money we used to call equity, shareholder equity. That is nothing but a shareholder equity, capital. Revenue is nothing but a income. Okay, you understand now what is asset? We have a future economic benefit, that is called the asset. Liability means financial obligation. Expenses means no future benefit. Drawings, you understood, we are taking the money from the business. Equity, you understood. Capital, you understood. Revenue. So while passing the general entries, you should know about these things. If you know this, what is asset, what is liability, what is expenses, drawings, revenue, then you can crack any interview. Okay, so next step, once you learn about these things, learn the rule. This is the rule. Dealer, Dealer. Okay, D means what? Drawings, expenses, assets, liabilities, equity or capital, revenue. Okay, there are two parties here. DEA is one party, LER is one party. Means what? If while passing the general entries, have to pass, like there are two entries, like debit and credit. So if drawing is increasing, I have to debit the entry. If expenses are increasing, I have to debit. Assets are increasing, debit. Okay, again I'm reiterating. Drawings is increasing means what? Have to debit the entry. If expenses are increasing, debit the entry. Assets are increasing, debit the entry. Okay, like that. Liabilities, if liability is increasing means what? Have to credit the entry. If equity or capital increasing means what? Have to credit the entry. If revenue is increasing means what? You have to credit the entry. These are debit side people, these are credit side people. If debit side entries are come like drawings, expenses and assets, you have to debit the entry. Like credit side people means what? Liability, equity or capital, revenue. If these entries are coming into your equation, then you have to credit that entry. Okay. Same thing, if these three are increasing means what? You have to debit. If these three entries are decreasing means what? You have to credit. Okay, the same policy here. If liability, equity, revenue are increasing means what? Have to credit it. If these are decreasing, have to debit it. Okay, now we'll pass the journal entries now. So what is the first entry? Ishwar started business with cash. Okay, now this is the business, this is the person. Okay, this person is starting business. Okay, what is happening here? Business investing money into Ishwar started business with cash. Okay, here what is happening? Business is receiving cash. Okay, what is the journal entry? Cash account debtor to capital account. Cash account comes under real account. Okay, what is the real account rule? Debit what comes in and credit what goes out. So debit what comes in means what? Cash is coming into business, that's why we are debiting this cash account. Okay, capital account, it comes under personal rule. What is the personal account rule? Debit the receiver, credit the giver. Okay, credit the giver, that's why we are crediting this capital account. Okay, now also you can apply one more logic here. Cash means what? Asset. Asset is increasing, that's why we are debiting cash account. Okay, capital account, it comes under this group. Okay, capital also increasing, capital account, simple debit. Second one, opened a bank account and deposited 50,000. Okay, now here two accounts are impacted, one is bank, another one is cash. Okay, what is happening here now? First we'll look into the journal entry. What is the journal entry? Bank account debit to cash account. Why we are debiting bank account? So bank account comes under personal rule. Debit the receiver, credit the giver. Debit the receiver means what? Bank is receiving the cash. Debit the receiver as per the rule, as per the personal account rule, debit the receiver. Okay, we should debit this entry, bank account debtor to cash means what? Asset. Okay, what is happening with asset? Cash is going out from business, correct? So asset is decreasing, means we have to create the entry. So you get the rule, it comes under real account. What is the rule? Debit what comes, credit what goes out. So money is going out from the business. Debit, credit what goes out. Cash is going out from the business. That's why we are crediting this cash account. Simple. Now, third one. So, what is the third account? Third question. Received commission from Amrut. Correct. So, what is happening here? You are business is receiving cash. Correct. So what is the real account rule? Debit what comes in, credit what goes out. What you are getting here? Business is receiving cash. Debit what comes in. That's why debit what comes in, cash account. What is coming into business? Cash is coming. That's why we are debiting this cash account. Debit what comes in. And commission. Why we are crediting this entry? Commission comes under nominal account rule. What is the nominal account rule saying? Debit all the expenses and losses and credit all the income and gains. Credit all the income and gain. So commission is income to our business. That's why we are crediting this what? Commission. So again I'm reiterating the rules. D means what? Drawings, expenses, assets. Okay, these are one party. And liability, equity, capital, revenue. Okay, these are one party. DEA, these are debit people. LER, these are credit people. Okay, now while passing the journal entries, you have to remember this rule. If something related to drawings, if drawing is increasing, we have to debit the entry. If expenses are increasing, we have to debit the entry. If assets are increasing, we have to debit the entry. Okay, now I'll come with this group, credit people group. What is happening here? Liability, equity or capital, revenue. If liabilities are increasing, outstanding expenses are increasing, means what? We have to credit that entry. Okay, so liabilities are increasing, equity or capital. Okay, if capital or equity is increasing, means what? We have to credit that. If revenue or income is increasing, means what? We have to credit that. Same logic here. If drawings are decreasing, credit. If expenses are decreasing, credit. If assets are decreasing, means what? Credit. Same thing here. If liabilities are decreasing, debit. If equity or capital decreasing, debit. If income or revenue decreasing, means what? Debit. Okay, this is the rule, and going forward we'll discuss every day simple general entries, and we'll work on it. We'll rock it together.